My name is Andy Hamilton from Ice Angels in Auckland. I was the chair of the Angel Association before Uncle Ray. And I really just want to say firstly a welcome to all of our international guests. It's a privilege and an honour to have you here in New Zealand. We've got 4 speakers, 4 minutes each. I've got the timer, it won't buzz, and they're going to talk a little bit though about trends in their markets, right? And then we've got a bit of capacity potentially for some Q&A. So we've got David talking about China, Mark talking about Taiwan, Samson talking about Hong Kong, and Eric about Sri Lanka. We're not going to go through their profiles. You can look in the booklet on page 16, or if you're literate technology-wise, you can go to the show Gizmo and look under the people profiles. They're going to talk a little bit. I've asked them to talk about 1 or 2 trends in their market that is, really happening at the moment around deal size, valuation exits, sector-focused government regulation, cross-border, equity crowdfunding, whatever they choose to talk about in those two items. So, welcome. Put your hands together for Mark from China. For David from China. Welcome, David.
Thank you. Good morning. So I've been asked to keep it short and sweet. Otherwise, I get my butt kicked. And besides, we're the last panel before lunch, so we'll try to keep it short. But I think in the context of China, I can just kind of give you a sense of where we are today and my own story as to how we came to be. Because China is a market. It's tremendously large. It's huge, right? The angel market is new. There are many, hundreds, if not thousands of angel investors that have come to be within the last, I would say, 3 to 4 years. Local deals that, as we've seen, have become large, whether it's Alibaba or Xiaomi or Tencent, these large companies that have become behemoths in the international stage. But at some point in time, these companies were startups, maybe 10, 15 years ago. In the case of Xiaomi, 6 years ago, right? Xiaomi as a phone company, they make hardware devices. 6 years ago, they were a startup, 0 revenues. Last year, I went to this conference and I heard the head of Xiaomi speak. And the revenues for Xiaomi phone company, $6.6 billion US, annual revenues. So 0 to $6.6 billion within 6 years. That's a phenomenal story. They were a small company 6 years ago, right? So that gives you a sense of where we are today, but my own personal journey kind of, 8 years ago when I came to China, we wanted to join an angel investment club as a bunch of Americans living in China, but there were none. There were no angel investors that I could find of any sort of our definition 8 years ago in China. So we started a group called Angel Invest. We had a couple of guys and gals around the table. But since then, the local investors have come to the stage. And these are the guys, in my view, that are the guys that will dominate the angel investment scene going forward, right? But the thing is, China as a market, from an international perspective, is very bifurcated, right? So when I go speak, let's say Europe or elsewhere in the world, people mention to me, well, how do I crack 2 big markets in the world? Number 1, USA. Number 2, China. Now, America's easy. We all speak English. We're all Western trained, Western, context, right? So we can go to the United States and not a problem. The second market, China, not so easy. Many people think that's a great, black box of opportunity, but also a big black box of fear, right? How do you do that market, right? So the topic that we're talking about today, cross-border collaboration, it's all about people. It's all about everybody in this room. It's all about how we can connect this week and beyond, about how we share the information, the deals, right? Because then maybe if we're a bunch of American guys sitting in China, we have feet on the ground, but we can have a conversation. We have a context of understanding. We have deals, you have deals, and maybe there are ways that there are angel groups that we see in China that can collaborate with other angel groups, whether it's here in New Zealand or the United States, right? But having said that, I think this group of people here, our group here, is very different than what I see in China when I go back to Shanghai and Beijing. I mean, they're all local Chinese, Mandarin speaking, etc. But those are the guys that'll get into deals such as Xiaomi, invest maybe a couple $100,000 and they do 1,000x on their investment, And the guys that got into Alibaba 15 years ago, they put in a couple $100,000, that became one of the most successful IPOs of all time, right? So that's what I see. But the question is, how do you bridge the gap? How do you take, our knowledge, our deep, vast experience, 50 years of history of when angel investing started in the United States to what it is today, take that experience and put that together with the market opportunity of China. It's about connecting with people, from my perspective. Am I there?
Look at that.
Okay.
Put your hands together
Okay.
for 3 minutes 40. And I think that point, that you ended on is a really interesting question for all of us around access. How do you get in there? But let's leave that for Q&A. Welcome to Taiwan, Mark.
Okay.
Thank you.
Thank you very much. So I don't know how much you guys know about Taiwan, so I'll start from a macro level. So Taiwan is a country of about 23 million people. GDP is about 550 billion. Per capita income about 20,000 US dollars per year per person. And internet penetration is about 95%. So it's kind of a, when people tend to think about Taiwan, they may associate it with China. But I look specifically at the ICT space. So from the ICT perspective, Taiwan is actually doesn't behave quite like China. And what I mean by this is in Taiwan, there's no firewall. We use Facebook, we use Google as opposed to Baidu. So in terms of internet behavior, it's very, very westernized. Also, in Taiwan, we have one legitimate unicorn. It's called the PC Home Group. So it's a listed company. It's been around since Internet 1.0. It commands a market cap anywhere between 1 to 1.2 billion US dollars. We have about another 4 companies with a 100 million US dollar market cap that's listed. The biggest probably sector for Taiwan within the ICT is gaming. So there are approximately 15 companies that are publicly traded that's in the gaming space, either as a game developer or as a publishing. So collective market cap of the gaming sector is about 2.5 billion US dollars. It fluctuates depending on the stock price. So traditionally, Taiwan is known for IT, semiconductor manufacturing. So if you're looking for hardware, investments for your hardware startup, IC design, semiconductors, usually is not a problem. But when you're dealing more with knowledge-based kind of concepts, what we call creative industries or software, where there's nothing tangible, where there's no need to build out a factory, that becomes more challenging. And so I think everything I talk about is within the context of kind of knowledge-based kind of ventures, whatnot. So it's much more challenging, and that's very paradoxical in Taiwan because there is a lot of money, and yet it's very difficult for entrepreneurs within the creative or knowledge-based sort of economy sectors to get any type of seed funding. So I guess that brings up why do we still do this, right? So obviously the Taiwan opportunity. The best analogy I can think of is the way we kind of see the Taiwan opportunity is if we use a kind of American analogy, baseball. To play in the major leagues, you usually need to go through like you play high school baseball, college baseball. Sometimes you skip college and go to the minor leagues. So the opportunity that we see from an investment point of view is that Taiwan probably is not a big enough market to kind of have its own sports league or sports teams, if you will, but it has a lot of good players that can fit into kind of the global marketplace for entrepreneurial talent. And that's where we see the opportunities in Taiwan. The best example is, in many markets, people lament the challenges of finding engineers. In Taiwan, we actually have an abundance of, I think, very good software engineers. Secondly, I would argue that one of Taiwan's advantages is its geographic location. So I think you could see it as a gateway to East Asia and also Southeast Asia. And so I think in Taiwan, we have, I would argue that, we have a good supply of trilingual candidates or workers. So it's not that difficult to find, let's say, someone who is fluent in Mandarin, Japanese, and English. And then increasingly, we're finding a lot more people who are from Southeast Asia, Vietnamese and Indonesians, who come to Taiwan to study. And even these days, we're finding an increase in the number of Spanish speakers from Central America because Taiwan has relations with Honduras, Nicaragua, and we are seeing a lot of students from like Central America. So I'll keep it at that.
You're doing good.
Yeah.
Thank you very much.
Yeah.
Look, just before you say, just a little bit on the fly. So we hear a little bit in New Zealand and Australia and a bit in America around gateway to Southeast Asia, right? And our experience has been typically the companies, the softest landing for them has been in Singapore,
Right.
and more emerging recently in Hong Kong, right? Do you have any view around, where, I suppose for non-Asian experienced founders, where you think is, the best way to start? Obviously, you've got a hardware startup. Taiwan makes a lot of sense, but most of our hardware startups get killed when they go to Taiwan.
Right. Okay. Well, in terms of, I wanted to keep my presentation short, but in terms of the gateway opportunity, I think, Southeast Asia is a collection of markets, and people do associate Singapore as the gateway. But my argument would be that in many ways, Taiwanese are the best suited for Southeast Asia in select markets. For example, people don't talk about Vietnam as much, but if you go to Vietnam, I think that having a Taiwan background, you actually have an edge. One, you're not Chinese, which they don't like, and two, it's ethnically and culturally, we have a very, it's very easy for us to understand Vietnamese because, they're really a Confucian society, right? So I don't see these arguments being put out, but I think these are the edges that Taiwanese have. And I think, we have an edge versus, let's say, Koreans or Japanese to understand Southeast Asia, just because I think culturally we're even closer to Southeast Asian than Korea and Japan.
Okay, thank you very much. Samson, Hong Kong.
Hong Kong,
welcome.
I think most of you will know that Hong Kong is a financial hub for China, and we used to be a manufacturing hub for China as well. But because of the China policy, China government tried to trim down the manufacturing and try to pull up the internal consumption. And one thing that is very special is that China government try to push everyone to innovate and try to push the younger ages person to do a startup to solve the unemployment issues. And actually, I think in Hong Kong, actually we are the hub, and Hong Kong itself, we only have 7 million populations. The policy in China is influenced Hong Kong a lot, and because right now the China government pushed the startup policy, and therefore Hong Kong, I think we are following the trend, and therefore we can see that more and more startup in these 2 years compare back few years ago, and especially there's more and more accelerators that come by the big names like the AIA, the Accenture, the DBS, the Infinity. They are starting some program in Hong Kong, work with the local accelerators to drive Hong Kong's startup communities. I think that is one thing that is new. And while the major sectors, I think Hong Kong's still is a financial sectors. One of the major startup sectors is the fintech, the financial technologies, the internet or the mobile stock, mobile insurance, stock trading, that kind of thing. I think that is one major area that Hong Kong is pushing. And as you know, there's so many banks in Hong Kong and China. They are adapting the new things because internet will definitely will give them a threat. If they don't use new technologies, using new startup, new model, then I think they will be marginalized. And that is the fintech is the major thing. And apart from that, I think IoT and big data. And in Hong Kong, in the last 10 years, we have a startup called the DJI. It's a drone company. They are taking video by the helicopter. They become the only unicorn as a startup in the past 5 years. And I think with that kind of electronic mechanicals products, we work with Samson very well. And we start with more IoT and also the big data analysis. While DJI, they don't claim themselves as a drone company, but they claim themselves as a big data. They are collecting data, selling service in the intelligent or the precision agriculture, that kind of area. The last thing is cross-border. I think right now more and more Chinese VC or angels, they are moving to Hong Kong. And all those big names like Alibaba, Jack Ma, Tencent, they become the Hong Kong's new immigrant because they put money in Hong Kong will be more safe than in China. And therefore, I think Hong Kong will become the hub if you invest in Hong Kong or using Hong Kong as a fund pool to invest overseas, I think Hong Kong eventually will play an important role in that kind of China and international funding or angel collaboration area. Thank you.
Thank you very much. Now, before we hear from Eric from Sri Lanka, just listening this morning and hearing Nelson talk a little bit earlier about the trends around corporate innovation made me think it's a great time to be an angel investor. Like, the thing that I've noticed over the last couple of years is there are thousands of people doing startups everywhere. You know, you talk to Jay, like there is hundreds of thousands of startups in India. You know, and yes, there is the 7,000 applicants to YC to get 120, and yes, you can see that as a negative, but wow, there is just, startup is everywhere around the world. It is really, really trendy, and it is going into so many different places, which as an angel investor, that's kind of cool. So is startup land happening in Sri Lanka, Eric? Welcome.
Thank you very much. So let me just share some insights into Sri Lanka, which I think are very relevant to New Zealand in terms of, because we have similar types of a small market, island, trying to fund entrepreneurs who are trying to scale regionally and globally. So Sri Lankan, the angel market is fairly young, but in a short period, we've already managed to get about 30% of our funding from foreign angels. That means a third of the deals that have been funded have come in from overseas. And it's spread across many sectors rather than being very IT-centric, which you will find if you go to India. So it's very different to what was there 10 years ago. 10 years ago, it was a startup in IT, wanted to build a company that eventually goes to Silicon Valley, and we've had a few of those. We've got one on the NASDAQ, we've got another that got bought out by the London Stock Exchange. And now, the whole LSE system runs on that. But that's like, for us, Silicon Valley, reality distortion. I mean, it sucks up so much of time and energy. Today, what we have is we have an ecosystem where we have a lot of Asian angels who have come in. And it's in nanotech, it's in IT, it's in fashion, it's in food tech, very, very diverse range of investments. So how have we done this? One of the key sort of learnings we've had is, in terms of getting foreign angels involved, is we've tried many things. We've signed MOUs with different angel networks, but it yields very little results. So as Marcel said earlier, what we've discovered is people do business with people. So we target foreign angels very, very aggressively. When we run events, we have angels coming from India, from China, from 500 startups, from Singapore, from around the region, get them involved in our events. And also, we target the composition of the angel network is very, very important. So there are lots of people in Sri Lanka who can cut big checks, but we've kept them out of the network sometimes because they've come in for the wrong reasons. We target people who can add a lot of value. So, for example, the head of the Nanotech Institute, we've targeted him to come in. So people who can really add a lot of domain knowledge and in terms of mentoring these startups, to scale regionally. So sometimes it's very difficult, it's a very slow grind. There's a guy I spoke to a few weeks ago, trying to bring him into the angel network. Gave him a nice lunch and I quietly tossed the question, would you like to join the Lankan angel network? And he said, I don't get involved with religious fanatics. So it's a very, so after many more lunches, I think we're at the point where he's ready to come in. But going back to what you said about how you went, I think this is very relevant to New Zealand. The pitches we listened to last night was you start up in New Zealand, go to Australia, and then you cross this big chasm into the US. And I think there's a lot of opportunity right here in Asia. And it's not so much about a landing point in Asia where you get in. It's the people who come in. So your angel investors who you bring into the network. I mean, that's how we've opened up a lot of markets in Asia for us. We have Singaporeans, Indonesians who are part of the initial seed funding who have literally opened doors for us, from day one. Another thing we've noticed is the valuations. It's very conservative in New Zealand. It's from what I heard last night.
Don't tell the entrepreneurs at the back of the
Okay,
room.
so entrepreneurs don't listen.
They're unrealistic.
But we're seeing really double the valuations, and I think Jayesh maybe hit on something. He said the entrepreneurs here tend to be twice as old. So maybe it's irrational exuberance in Asia. I don't know. Maybe there's some correlation there. So those are sort of the key learnings that we have that we can share from you.
Right. So we're doing good, and we've got 15 minutes. We've got a few questions. I want to put a challenge. All right, Bill? Yep. I want to put a challenge out to each of these four fine gentlemen. And the question is, would you give your angel investment dollars to a 19-year-old? And the question relates to a story of a kid who was maybe 17 at the time. And this kid, through a friend, his mentor, rang us up at the Ice House and said, hey, I want to give you some time before I go to university. I'll give it to you for free. And we're like, he turned up, he had braces, he was a lot shorter than me, he was pretty lippy, and he did say, when he said, I'm going to do some work with a guy called Josh Lerner. And I was like, that guy, Josh Lerner, I remember that name from somewhere. And then I remembered from Francesca that Josh Lerner is quite a big guy in US and research and VC. So I was like, oh. Well, fast forward 2 years, that 19-year-old kid who is at Harvard University has just closed a round $5 million investment from Tiger Funds on a 50 pre after raising $1 million a year ago in Auckland from our angel group led by Janine on a pre of 2.8. So a 19-year-old in a year has created on paper 50 mil close in value, right? And the challenge that Jayesh put out to us is all of us should go out and find young new things, because on a portfolio perspective, we have a lot of fun doing that. It's hair-raising and challenging, but if we add to our portfolios with these sorts of people, I think it's really going to be richer. Now, the challenge is, how many 20-year-olds have you backed? And secondly, what commitment do you give to back a sub-25-year-old over the next year?
So that's a great question. We have seen many entrepreneurs that are under 25, and it certainly is the exception versus the rule when we fund very young entrepreneurs in China.
Yeah.
Right? Because, yes, there is tremendous exuberance in the community in China, fueled by the government support and encouragement for young kids to go start companies because they really can't get jobs, because there are no jobs out there, or not enough jobs to feed the college kids. So entrepreneurship is certainly on the rise, as we've seen in the last couple of years. But having said that, a lot of publicity, a lot of PR about entrepreneurship, hype. But the reality is, yes, we want to be value-added investors and help and all the good things that angel investors do. But ultimately, it's about return as well. It's not charity, right? We're not here to kind of pay additional tuition. We want to help, backed by the qualities that you want to look for in any, founding team, right? So the answer is, in China, very few, even though there are many startup events, and in colleges, and we go to these all the time as well. However, we have backed I think he's 21 at the time, a Silicon Valley-based entrepreneur, right? And then obviously the Valley is much more mature than China. And this kid, he actually went to Berkeley, graduated top of his class, and then he had this idea for a company, 3D printing company, to do services. And when we had the phone conversation, he and I, he said his dream in high school was to launch this company. And to achieve that, he had to go to Berkeley, major in EE, do well, get involved in the venture community, get his idea mature, find co-founders, raise money. He did exactly that. He was the valedictorian of Berkeley, of his graduating class, in Berkeley, and he got people like Tim Draper and many other veterans in the Valley to back him. And then he just needed a small chunk of capital from us as an allocation, and we said yes because he said we wanted a China angle. That's our value add as investors. We could bring him to China or look out for him in the China market. But we backed him despite his age, because he already had established all these other criteria.
So what about in Sri Lanka, Hong Kong, Taiwan? Are you seeing, are you seeing kids coming out?
Just back to 19-year-old, dropped out of college, can't speak English, but he's absolutely brilliant. And I think you can't generalize. There are exceptions. I've been burned by 18-year-olds as well, and I said never gonna, no more money for under 25. But you come across these guys, and you know it when you see it. So.
Yeah, from my experience, we have a counterpart in Guangzhou. They call the Inner Valley. They are especially making a lot of pitches and investing early stage. One of their successful stories is they invest in a small company, a young guy, 17 or 18 years old. And but the major thing is he or she must be very familiar with their own segment. That product, they are making some software for universities. I think that is, they do have the domain knowledge. Then my partners invest into them. And luckily, I think the most important is if they have good products. But right now in China, there's a huge market, but you have to get the right channel. Therefore, we got to connect him with a investor. Is what called the 360, a software company. They own 300 million users. Once that investor become their mentor and invest part of the company, they can use their channel to sell food or to get more connection downloads. I think for young startup, they have good idea. They can make product close to the market, but they need really good angels or channel partners. I think that is a must.
Yeah, and I think the really interesting thing is we knew Jamie, this kid, was brilliant, but it was a bloody consulting model, and we knew the value was too much, and some of us missed out on the deal because we thought, I ain't investing in that at that value, but others went 20 grand, 40 grand. This kid is going to be brilliant. Something will happen. They just made a punt. And that's the thing that I think many of us angel groups need to think about. How do you enable and make a quick decision? Because the rationality of backing Jamie on his business model, you would never invest. But on the basis that this is a kid that will make some money at some point, that's why it was worth making the punt. And now, everyone's going to say to Janine, you're a rock star.
Maybe just to pick up on this, right? So one of the things that we're hearing a lot in Hong Kong is from the Western-minded investors, right? You got to back the jockey, not the horse. Back the jockey, not the horse. And your example has been classic. The example that you gave, it's all about the jockey. He's going to do something. Don't know what, but he's going to do it. So I guess if I put that to you four gentlemen, what are you guys seeing in your respective startup ecosystems? I'm used to Malaysia, Singapore, Hong Kong. It's a little bit more traditional. We tend to, I say used to, and I'm being a bit general, go for the business case, the X, the Y, ticking all the box. But what are you guys seeing? Maybe just a quick response from any one of you. Is it shifting more to we're going to back the jockey or the horse is crucial?
Let me try to take a crack at that. What we see in Taiwan, so I think I was just conversing with someone from about Silicon Valley. So I think in Silicon Valley, you have a lot of MBA types who talk a good game, but maybe when it comes to actually delivering on the product, they fall short. In Taiwan, specifically, we find a lot of good technical talent, but actually what we lack are the MBA types who can tell the story. So I don't know if the MBA type is the horse or the jockey, actually. But definitely, so the thesis that we're working on now is, I think if we can build like a multinational Asian team, especially if you're looking at the region, that would be crucial because Asia is so diverse and you really need to cross borders. So that I think would be the ideal situation. I think that Taiwan has a lot of good technical talent. But that CEO, that storyteller, that hustler, whatever you call it, is what we lack. And I think if we could somehow bring in someone who's more Western-minded with the Taiwan entrepreneur, I think something magical could happen.
Yeah, so that's a great point because, so on that question, we always bet on the jockey, but we'll find the horse. So for example, we bet on the company last year. It's a Texas-based founder who's been doing it for 10 years, had no traction. We moved him, the founder, to Hong Kong. He became the jockey, and we found him a couple horses.
Interesting. Eric or Samson?
Yeah, I think you can't generalize, but I have a similar situation. There's a kid from Stanford, not a kid. He's got a PhD. He's got patents, and he's going to do something, but he doesn't want to make. He wants to do for free. So he's done a Braille app. Doesn't want to charge for it. He took on Apple, beat Apple, and he's going to do some. Waiting to put something into that, but he doesn't want any money right now. So you get the exceptional individuals who come across, but generally it's about teams. We won't back. If you have a two to three founder teams, that works out a lot better than that's been our experience.
Yeah, from Hong Kong, I think Hong Kong need definitely more a good jockey, and I think there's so many good teams in China, and they are really committed. But the jockeys in Hong Kong, the average they are wealthy, but they are not good angel investor. I think that is what we are looking for to get more experience and knowledge and know-how.
We heard a little bit about access today, and about us as angels need to develop relationships with each other cross-border. One of the things to think about is how do you accelerate that? So us at Ice Angels and Melbourne and Brisbane Angels have done a couple of deals together based off 7 years of coming to conferences together in Australia and New Zealand. Sometimes it's harder though. Sometimes you might have to do something like, say, as an angel group, we really get on with a group in Hong Kong or in Malaysia or Sri Lanka. Why not just put 50 grand into a fund that invests in their deals alongside? We've done it this year with some kids that we've done out of University of Auckland, where Janine and others put 50 grand to help them invest in our deals to get a closer nexus. I think some of the people here have invested in Jayesh's fund as well to promote that, get that closeness together. It doesn't matter how you do it, as long as you start doing business together. And I think that for me is a really interesting thing. And Marcel did something like this at ABAF last year, but accelerating that, doing something together makes a difference. Could you please put your hands together for David, Mark, Samson and Eric? Thank you.